Good morning, traders. Hope you guys are well. Andy Dem here from the London Trading Institute. Um, a lot of you have been watching what's going on in Bitcoin and crypto markets, and we have had a bounce recently. Some of you might be kind of a little bit relieved, but in general, guys, what I've been seeing is a lot of people have been panicking and panic selling their crypto assets. And, I want to kind of speak a little bit about that, but also I want to speak about Celsius that has really, in my opinion, exacerbated the move, the crash, which I think was imminently going to happen anyway. But I want to talk about Celsius and the role that it had to play, and also what my view is on this platform. If you're new to our channel, guys, please do hit the subscribe button and hit the bell notification. And that way you'll get all of our videos sent to you and you'll be notified of them. And if you like our content, please like the video. Right, let's talk about Celsius. So what is Celsius? Well, if you are kind of new to the game, you may not know about Celsius, but you may now have heard about them because Celsius essentially provide a platform where you can earn interest on your holdings. Now, what people kind of don't realize or think about is, you can kind of, the concept is good, and I use a different provider for reasons that I'm going to speak about, but they essentially allow you to hold your Bitcoin, your Ethereum, your stable coins, and you're able to earn a passive interest with a relatively small lockdown. Now, if you think about the way banks work, right? How do banks work? The traditional banks. Well, they take your money, okay? They pay you a little tiny bit of interest, and then they use that money to go and make more money. Okay, and essentially, this is pretty much what Celsius do. So, in order for them to pay you an interest, let's say, 7-8% on your Ethereum, what they will do is they will have to make more than the 7-8% that they're paying you. So how do they do that? Well, we don't really know exactly how they do it, but, if we kind of speculate, then the most likely thing that they're doing is that they are farming. They are basically essentially staking and earning a higher interest. Okay, so they're staking, and that's one possibility. There's various other ways that they can do it, but that would be the obvious way where they can go and lock. So let's say, for example, you put in $1,000 worth of Ethereum. They could take that $1,000, pile it in with the rest of their Ethereum, and then go put it, into liquidity pools where they can earn a higher interest. But here's the but. For these, for these holdings, normally they would have to lock them in for a longer period of time, so they're not so liquid where they can just take them back. Okay. So if you imagine, like, if everybody kind of went to the bank and put their money, and then all of a sudden, they wanted to withdraw it, well, the bank doesn't actually have that money there. So, there is counterparty risk. Now, here's the thing. When it comes to traditional banks, you are protected, right? There's a regulator, there's, the financial compensation scheme, and you'll get basically your money back. But with crypto assets, that's not the case. And so what happens is, you actually do have counterparty risk. So if basically this happened to Celsius and they went out of business, you would lose your money. Okay, so you have to look at that. Now, what's actually happened? Well, what's alarmed people is essentially they have essentially stopped withdrawals. So you can see here, due to extreme market conditions today, we are announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts. We have taken this action today to put Celsius in a better position to honor over time its withdrawal obligations. Now, that's not good, right? That's created panic because, you know, as the market was in turmoil, people wanted to take their money out and they couldn't. And as I understand it, that's still the case as of today. And you know, and they're kind of, you know, talking about in this blog post, you know, how they're kind of taking action to essentially correct that. But it, you know, what's likely to happen is as soon as withdrawals become available, and hopefully they do, if you do have your money in there, everybody's going to want to take their money out because, you know, and that's going to, you know, and I'm sure they are taking that into account. So, you know, I think that it's not that Celsius are doing anything that, you know, a normal bank isn't doing, but you don't have the protection that a normal bank does, and that's what the issue is. Now, I don't use Celsius, but I do use another platform personally, and that platform is Nexo. And you know, I can do another video on Nexo, and I'll put a link on in the description if you want to check Nexo out. You can also use my link, and you'll get $25 worth of Bitcoin if you decide to use Nexo. Now, there is still some risk, okay, but what has been proven, in my opinion, over this period here is that Nexo is much more stable because they have various different you know, things in place to protect the user, including insurance, which is kind of like that protection that you get from the regulator. Okay, so if you're interested, comment and I'll do a specific video on using that platform. And I'll put but you can kind of check it out for yourselves anyway. I'll put a link in the description. But I'm comfortable with that platform. Now, you've still got to do your due diligence, and the reality is like, you know, the only way of really fully, you know, being as safe as possible is to have your assets stored on a Ledger Nano, you know, a cold storage. You know, if you're not doing that, then of course you do have some risk. Okay. But like I said, you need to read the sort of fine print, but there is protection. That unfortunately with Celsius, there is not protection. There's no protection. So hopefully they're going to sort everything out. I'm sure they will. There is a rumor that Nexo actually offered to buy some of the debt of Celsius to be able to meet its obligations. But at the moment, that's just a rumor. But it just kind of highlights that, you know, Nexo is in really good, you know, has a really strong balance sheet. And I've actually received an email from them after everything that happened with Celsius, letting me know, here, look, you know, we're absolutely fine, and here's the reason why. And they kind of listed a few various different things, like, you know, that they have a business model that really, you know, is sustainable. Okay. And yeah, and that kind of really helped, you know, ease concerns of, you know, for me and for people that are holding positions there. But like I said, there is always going to be some element of risk if you're not putting your coins in cold storage. And you know, and we can talk about a little bit about Bitcoin as well. You know, let's bring in the Bitcoin chart and have a little look. You know, we've had a nice little bounce. This is the daily chart, but you know, I think at this stage there's no, you know, it wouldn't surprise me if we had a rally. Okay, however, you know, at the end of the day, you can kind of see we are essentially, you know, trending down. And, you know, at the moment, any kind of bounce is going to be met with resistance around this kind of 28,000 area. So, yes, we could get a bounce, but that doesn't mean we're going higher. I think, you know, there's a lot, you know, we could get a bounce, but there's a lot of reasons why we could go lower as well. So, you know, just have that in your minds that that is a possibility. You know, you can kind of see we have, I mean, we've pretty much broken all these inner trend lines here. So we are kind of, you know, I don't think we're going to go down here. I mean, you know, anything is possible, of course. Let's have a little look and see where the Fibonacci comes in on this one as well. Let's just this. So the next fib target, well, I mean, officially it's 10,000, 11,000. However, I think, you know, we could potentially have a really strong rally up to even 35, 36,000 and then, you know, come back down again. I mean, I really don't think we're going to go this low, but, you know, I guess, you know, we'll find out. But, you know, we're kind of at this is called a Fibonacci fade zone. We haven't hit the 38.2, so we could end up doing that, and then potentially that, and then I guess it depends if it goes below back through this line. Then I think we could then go down to that level. Yeah, I think that would be the way it would happen. I don't think we're going to go lower here without having at least a little bounce. But, you know, I think the safest way to do this right now is just to buy small amounts on the dips and then just let the market do its thing. And I think over time, you know, if you don't sell, then you should benefit from the long-term potential of Bitcoin. All right, guys, that's all from me today. Hopefully that was somewhat insightful and useful. And that's all. If you are new to our channel, guys, hit the subscribe button and the bell notification, and do like the video by just clicking the like button. We really appreciate it. Take care, everybody, and see you soon.